Hello everyone, welcome to Elliottwave-forecast.com YouTube channel. So in this video, I'm going to be updating you guys the gold to silver ratio. Now, I'm tracking this ratio because of a couple of things, right? This ratio is really helpful, basically to determine what the direction of the underlying metals, gold and silver, right? This is just a derivative of the underlying metals, but they do have inverse correlation, meaning if the ratio goes up, the underlying metals go down, and vice versa. If the ratio goes down, the underlying metals go up. So if, let's say, if you're bullish the metals, if you're bullish gold and you're bullish silver, you would expect this ratio to go down instead of going up, because if it goes up, then technically it will be bearish from the gold and from the silver. Okay, now I've been monitoring this for a while now, but here is my latest view on that and I'm just focusing on the larger degree here, daily time frame. So we got a spike up, as you know, and this is all-time high in the ratio back in 2020 during the COVID-19 scare, right? And then since then it has completely reversed a lot from 126 all the way down to 60, which is more in line with the historical average in the past 50 years or so. Then we've been kind of sideways. So I'm originally thinking that we have already turned lower and ready to go down, but I've been proven wrong. It continues to chop around and continues to rally without further follow-up to the downside. Now, a couple of things I want to highlight here, guys. Number one, this rally, well, this one was corrective because I can label it clearly where the connector is, and it did react lower very much from the area where we expect it to react, which is the 100% extension level, right? From the 100% extension level of this ABC. So I would say that eventually, based on that structure alone, eventually, most likely, we're going to break below the A. We're going to break below the A instead of breaking above the peak in the March 2020, okay? Because the rally was corrective. Now, second thing that I observe here is, and this is what makes it a little bit difficult here, this follow-up after the risk rally is also a three waves down. Unfortunately, this one was a clear three waves as well, and it's also at the 100% extension, no extension whatsoever on the third leg before it rallies again. So what that means is, because this is also three waves down, technically speaking, you cannot completely eliminate the idea that we are actually doing this W. So this could be a W, this could be X, this could be Y. Now, it still doesn't change the fact that this is corrective, and more likely than not, we're going to break below A at some point in the future because this one was corrective. But because the pullback since then is also three waves only, then this entire bigger WXY, you cannot completely rule that out. It is possible. Now, once it does this, it will then turn lower again after reaching, if it does, right? Assuming it does, it's going to go to the next 100%, which is around 106, all the way to 126, retesting this because it's 100%, 161.8, right? And then from here we can then turn lower and finally resume to the downside, breaking below 2021. So that's one possibility, right? That is one possibility. But if I'm using this one as my main view, the problem that we have is that requires a lot of weakness in gold and silver. And as you know, silver is like a leveraged gold. If gold drops 30%, silver easily drops 60%, twice as fast, or even sometimes 2.5, right? You use a leverage multiplier towards gold. If gold drops 10%, silver drops 20-30%, right? 2 to 3 times basically. Now, the problem is the last time we were here, right? I overlay gold price. Now, of course, this is not the same. Like you see, the last time we were here when the ratio was 106, gold was around 1,700. The low was around 1,600. That was the major low we had back in 2022. I'm not saying if we rally back to 106 here, sorry, this one was only 95. I'm not saying if we rally back to 106 we go back to 100, 1,600. No, as you can see, we were here around 86, but the last time we were 86, gold was a lot lower at 2,400, and then back here we were here. Back gold is even more lower, around 2,080, right? So all I'm saying is that doesn't mean the ratio goes back here or even above here, then the price will need to go back down all the way to when the ratio was here last time. No, it's not like that. However, let's say if we go up to 106, let's say, I can see easily gold going back to retest 2,000 again. I think that is definitely within the realm of a possibility. If we go to 106, we can go back easily to 2,000. Now think about it. If we do that, then that means gold currently around 2,600 will have to drop by around 30%, right? 2,600 to 2,000. We need to, I don't know, like what percentage that is. But it's 600, right? 600 drop out of 2,000, 600 out of 2,000. So it's around 25, I guess, 25%, right? It's around 25%, slightly below 25, right? Now, that by itself probably is not a big deal. Maybe it's not a big deal, right? But then if you look at it and then you think about silver, which is a multiplier of gold, let's say, okay, let's easily say it's 22% drop in gold if we rally to 106, back to $2,000. 22%. So silver, you take a 2%, 2 times multiplier, then that means silver needs to drop by around 40%. 40%. So that means silver right now is what's the price of silver right now? Silver right now is around 30.5, right? 30.5. You drop by 40%, right? So that means we're gonna go down all the way to below $20 again, below $20, which to me is not as realistic. And the reason is because silver has been capped at around $30 in many years ago, and then it has finally broken above it. I don't think silver will go back down again to below 20, since we already overcome whatever the ceiling was before in the last couple of years, which is around $30. At that time was, when, if you follow the social media and so on, there was this movement called silver squeeze, right? So it has overcome that level. I don't think it's going to go back and way down to below $20 again. It doesn't seems to be realistic to me. So that means I'm left with the idea that this is more likely they're not going to do this, but instead it will go down without breaking above this peak. But then if that's the case, then I have to find out what happened here, because it doesn't want to follow through on the downside. It continues to chop around. So I'm left with this possibility that we are actually doing some sort of sideways triangle now, right? So we are in a big multi-year triangle, and if I measure, it is A, B, C, D, and we're in the last stage in the E leg, which is going to be ending the B here. And then once that is complete, we can then turn lower for real. Now, when this finally starts to sell off, that's when you get further acceleration on the upside in both gold and silver, right? With silver outperforming gold, of course. Okay? And that's what I think. Now, if this doesn't play out, then unfortunately the other option really is like this, that double, which I think is less likely, like I explained before, because that requires silver to drop maybe to below 20 again, which I don't think is making any sense. Now, I know some people calling for gold to retest $2,000 to go back, but then they forgot what the implication is to silver when they say that. Now, by gold, if you look at gold itself, maybe it is possible, but then when you extrapolate that to what happens to silver, then it doesn't make sense for silver to go back below 20. And it is always the case, guys, when gold goes down, silver goes down even harder. And the same thing, if gold goes up, silver goes up usually faster. Eventually it's going to be fast because it's a leverage gold basically. Okay, and so that's basically the quick update on the longer time frame in this gold to silver ratio. If you follow gold to silver ratio closely, I hope this is going to be helpful, and see you all again next time.